Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 214 of the AJ Brown Show. Today is December 12th, 2025. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ. How are we doing today?
I'm good. I was just thinking, I was hearing you say 214. 214, if there's 52 weeks in a year, that means we've been doing this for more than 4 years.
It's true. Right around the pandemic time is kind of when we kicked it into gear so that we could keep the audience fed.
It's like we're seniors in college or in high school now.
We're moving on to the big leagues, I guess,
That's it.
at the turn of 2026. Um, the news topic of the week this week is we got our Fed cut. That was expected, and we did see the data to support that. Your big takeaway from that? Any surprises on your end?
Oh, absolutely. It was, and it's what all investors were looking for. Investors were looking for what is the Fed going to say? Because leading up to this, we've gotten some back and forth, haven't we? We got a couple of the Fed presidents saying, hey, we need to be a little bit on the dovish side. You've got Jerome Powell saying, well, we don't have any data. We're going to be on this side. You know, leading up to this, a week ago, 2 weeks ago, all the investors, I can throw it up on the screen. All of the investors who were looking at the rate, rate height, rate drop, what's going to happen, they were kind of piling on the quarter point rate drop. So we kind of baked that in, and unless it was going to be something different, that wasn't going to change anything. We also already got announcements that the Fed was going to end their quantitative tightening. I'm going to put that up on my screen as of the December 1st, and that happened. So everybody was like, okay, this is going to happen and this is going to happen. It's already a given. But what is the Fed going to say? And what did they say? Well, they came in a little bit more dovish than we expected. Number one, he said, hey, listen, and let me get the exact words. He said, a rate hike policymakers base case. So what does that mean? It means that people were worried that the Fed was going to come back and start raising rates because of the inflation worry. And he's like, nah, that's not even on the radar, at least not for the beginning of the year. But he also said, hey, we probably are not going to drop rates anymore. A lot of people are looking at the fact that his job is done and that starting in May, we're going to have the new person, which we already have a good idea who it's going to be. And they're very much dovish, meaning they want to drop rates. But the other thing that Jerome Powell, hinted at in his, few words means many, is that they're actually going to start quantitative easing again. He agreed that the Fed will start buying treasuries again. So all of that, the rate drop, the dovish speak, and then the fact that the Fed's not just going to stop that they might do quantitative easing. That's everything that investors wanted to hear in the for short term. And equity investors, the people buying stocks, they think very, very short term, like 3 months is as far as they think out. And so they were very happy, at least until today.
Yeah, and I caught a little bit of the speak or the Q&A session after the cut too, and one of the surprising points to me was the not having enough data. It's like, you're basing this stuff off of September, but we still behind on 2 months of data. He did reference that, and it's like, okay, so you guys making your decision on September, or do you have any insight on the last 2 days? And does that uncertainty kind of leave it kind of as is for the next 2 or 3 months?
And I'm not sure that I'm we've talked about this on this show, but the data also, once it does start coming, there's a question about how good it is, right? There's a combination of both Trump outwardly saying that the data's no good, and then also we know from behind the scenes that with the Doge cuts and also targeted cuts, that the data collecting organizations in the government that publishes these reports have been scraped down. They're at a bare bones group, so they're having to rob Peter to pay Paul to get any of these reports out. So there's questions as to whether this data will ever be good again, even when it does catch up. So that is a thing. And then there's also, I don't know if you heard this, but he said one other thing, and that was, and he said he's a man of so few words, but each word everybody hangs on. He said that tariffs are going to be a one-time tax, a one-time hit to inflation, and that's been a big question, right? A question is will the tariffs continue to spike up inflation, or will they be a one-time? So he kind of settled people's minds and said, okay, if we see a tick up in inflation because of tariffs, maybe it's just going to be just a instantaneous thing in time, and then we'll come back down. So he kind of gave people, at least investors, a whole bunch of good feelings, at least in the short term. It kind of gave a spike Wednesday afternoon. It continued to give us some upward momentum yesterday. It actually, I think, helped. We've been seeing this mass move of money from those high flying tech stocks, especially in the AI world, to other stocks, mainly financials, a couple of energy plays, things like that. But we've been seeing in the last 2 weeks, mid caps and small caps, getting a bump up in valuations as money's been moving over to them. Today, I feel like people have already digested this news, and they're kind of like looking at other pieces of data. And so we're seeing actually a sell off or some profit taking today. I don't know as much as a sell off, but some profit taking over the last two days of gains. So far, we've got a beautiful Z bar forming. Of course, it's early hours this day, so we'll see what happens for the rest of the day. And then next week and the upcoming weeks, we'll see less and less volume as folks start hitting the holiday season and focusing more on family and less on investing. But we'll see what happens, Sid. But I think we're forming a top today. Yesterday's high close will be the top, and we'll see where we go from there.
Yeah, I was just looking at your notes here, and you got to the point before me. The current market action, looking for a top. I see your pink arrow there starting to develop. I'm assuming we're gonna wait for the close, but that's one of your nifty indicators on the equity side. And like you said, heading into the end of the year, right? We'll start to maybe develop some chop in this area simply because the volume is going to die down. We're going to start to, portfolios are going to start to want to close out or lock in some of those annual gains. And I see you pulled up the rainbow chart. And so that red area looks pretty darn wide from what I'm seeing.
It's a big, wide area. It's based on our previous move. That's the whole theory behind retracements, is to compare the current move you're in to the move that happened before you. And even if you're looking, at previous moves, you compare it both ways, right? And so we're on this move, and not just like it's almost like we're in a divergent pattern. It's not almost. We are in a divergent pattern. The last move down, not only did it go below the previous move, but it went below just by a little bit the move before that, right? You can see we dipped down below the 6,552.51 threshold. We wound up closing that day at 6,538.76. So we were a little chunk below there. Now you can see not only did we surpass the previous high close with this move, but we now surpassed the one before that. So we're kind of getting wider and wider. This is called a divergence pattern. Yesterday we closed at 6,901 on the S&P. That's about 10 points higher than that previous high close. But like I said, We're already forming the arrow. You're right. This has got to be an end of day signal. So we're not going to really give this red arrow any justification until, we close today. But the last piece of data on this, of course, is that we are in this red zone. We never made it into this green zone. So if we do wind up forming a top here, closes in the red zone, or should I say reversals in the red zone, are all evidence for sideways choppy channeling, whether it be a divergent pattern or not. We're kind of in a sideways choppy a pattern here. The other thing that hints at that, Sip, is these trend changes. We didn't have a trend change for about 6 or 7 months. We were in an uptrend up until like the first week of October. Then we started with these trend changes. Since October, it's only, December. So it's about 2 months, maybe it's in a couple weeks. We've had 4 trend changes. 1, 2, 3. Most of these don't even hit maturity before we trend again. This is sideways chop. You change your whole way of investing if you're doing trading when you see that the market changes personality like this.
And as soon as I see this chart, the next thing that comes to mind for me is what's happening with the VIX, because that's been kind of your flavor of the week and flavor of the trading trainer community and some of the guest appearances you've been making this week. Have we gotten our buy signal almost there, right? We're waiting for a close for today as well.
Well, let me change our indicator. And don't forget, everybody, if you're using the Charles Schwab Thinkorswim platform, you can download these indicators for free. The indicator I was just using was for looking at the broad market, but for looking for entries on, symbols, I like to use my fast MACD indicator. And so, we had a bottom signal that came on Monday afternoon. All of my signals are after hours or end of day is what we call them. So we got a signal on Monday afternoon, and then we like to look for follow through in order to place our VIX hedging trade. And I didn't get that. I didn't get that on Tuesday. I for sure didn't get that on Wednesday. And then I didn't get it yesterday. And at the end of yesterday, I got a signal that said, hey, stop looking for follow through until I give you another signal, because I think we're going to go lower. Well, today, we've got this beautiful S bar bringing us back up to the levels that we were, and a signal is forming. Again, this has got to be an end of day signal. So even though a signal is forming, I'm not going to pay attention to it until the market closes. If that blue arrow is still there after the market closes, I'll try to do the VIX trade again starting next week. But today I took a day off of trying to complete that trade. So the VIX is bottoming out. We had kind of a false bottom this week, never got our follow through. We'll be looking again next week to get into this trade.
Yeah, I'm seeing the VIX up 14% today at the moment, probably in line with that sell-off. The other news bit that I'm seeing a lot of headlines around is gold hitting all-time highs again. Do you think that could maybe have some correlation into, what's been happening this week?
Well, okay, you can see right here on my gold chart from, thanks to CNBC here, that gold is pushing all-time highs. Why? Well, the Fed made that announcement, Sip, about quantitative easing. What is quantitative easing? You can see it right here. So it means that, this is the amount of IOUs that the U.S. owes the Fed, right? So the Fed will buy treasuries with their funny money, right? It's almost like they're creating money. So why would they do this? Why would they buy treasuries? Well, the more people who are interested in buying treasuries, the lower the bond yield comes. So they kind of tamp down inflation by buying these treasuries, or at least they tamp down the perceived inflation. They'll make the bond yields go down because the Fed is like the biggest customer of the U.S. debt. The only problem is different than like other countries, or different than you and me going and buying T-bills, right? Treasury bonds. the Fed is not using real money, right? We have to take money that we earned, we traded our time for, or we got some other way, inherited or parlayed through investing. However, we're buying our treasury bonds. We had to do something to get that money. The Fed just creates the money and buys these T bills, right? They're like, okay, and they basically create a credit sheet. That's this right here. The Fed owns $6.5 trillion of our debt. Now, in the short term, this makes everybody happy when the Fed says, okay, we're going to start increasing our balance sheet, buying more of these treasuries, tamping down bond yields, right? We're going to do that in order to keep things flowing, right? And that's what the Fed announced on Wednesday. In the long term, is it that good of a thing? Probably not. It basically means that, we're funding our big treasury bill, our big debt bill, which everybody said is unsustainable. We're now funding it with funny money, right? And so, long term, not a good idea. We'd rather have the Fed get out of the business of loaning the government money, fake money, right? Creating money in order to pay our debt. We'd rather get out of that business, right? Go back to pre 2008 when the Fed had, less than 800 billion on their books instead of 6.5 trillion on their books, right? And allow the economy to work, have the equal amount of spending as, this is not a way to run, any sort of household or business, and for sure not a sovereign nation as big as the United States. But in the short term, in the next 3 months, this is great things. And that's, you look at a lot of the president's policies on the fiscal side, and they're all, thinking short term, like in the next three. They're not quite out there thinking 20 to 30 years. And some people would argue with me, but evidence over the last year kind of proves that. So that's what we're seeing here. And so when, people in the long term start seeing that, oh gosh, the US was on this thing of getting the Fed out of the business. They were getting back to like making sure their expenses matched their income. The Fed was, Fed went from a $9 trillion holding down to a $6.5 trillion. We were hoping they would get below 5 trillion. And all of a sudden the Fed's like, well, I'm going to start adding to this. People are like, and so that's why you're starting to see the purchase of gold go up. You're starting to see in the long term, people are like, hey, right? All of a sudden, after 2 days of kind of like, yeah, oh, and their reality is setting in, right? They're like, ooh, and that's why I think you're starting to see at least a little bit of the reason of the sell off in the SPX, and you're starting to see some people buying some hedges. They're like, you know what? Maybe that's not the best thing for the long term. And again, no real time data coming in. So who knows what's happening? I don't.
Well, I'm kind of watching the news blurbs right now, and the headline for the pullback right now is Oracle delaying the development of their data center.
Mm.
You know how they made that big deal where they were like 300 billion or whatnot for data. It looks like they're delaying that 1 year.
Yep.
And Oracle is kind of bringing the whole market down. But I imagine this is kind of that
I
AI
was gonna
unwinding
say,
a little bit, right?
yeah.
They're kind of all correlated.
Well,
Along with the,
where I live, Sip, here in Northern Virginia, they call this the data capital of the world. We have not even far from where I live, maybe about 10 or 11 miles, we have a county called Loudoun County, which has the largest number of data centers. AWS is here, but they're building data centers left and right here. And there's a worry. The county of Loudoun, I was just hearing on a local news that they're starting to, take some of these revenue, not just from, the people who live in Loudoun, collecting their property taxes, but from the data centers, they're creating a slush fund and preparing for this over construction of data centers because of AI. They're preparing for an unwinding of the AI bubble. So that's something to keep in mind too. Throw in this AI bubble and possibly, a burst of that bubble. There's people preparing for it.
Yeah, and it's actually a good pivot to the morning sip topic, or one of the blurbs that I pulled for today for us to kind of discuss is related to AI. And so, without further ado, let's go ahead and pivot that conversation, because I completely agree, and so does this gentleman, which you may recognize, Jeremy Siegel.
Mhm.
He's a popular commentator on CNBC, and I believe a professor at the Wharton School of Business. And when he was asked about what he thinks about the AI bubble and AI investing, his response was, I think the biggest risk in AI investing is not whether it will work or not, but whether it can be done more cheaply. And so he kind of brings it back to during the dot-com era, when all these telecom companies laid out billions of dollars in new fiber optic cables, only to then discover, you know, a few months or a couple years later, that there's easier ways to get it done. And so they piled all this money into this infrastructure that didn't essentially get used. And it seems as if that's kind of the storyline now, where a lot of these companies are piling, and Oracle is piling all this money into these data centers, into these AI initiatives. And I believe he even breaks it down into the actual returns, that most of the AI initiatives have not produced ROI on those investments, even, some of these big tech names that we're familiar with. And so, AJ, on that, I mean, because you kind of went through the dot-com, investment
Mhm.
phase, and are you seeing some correlations? Does this statement resonate with
Oh,
you?
absolutely. Although, I think that, again, coming back to my statements from earlier, investors especially here, are so short-sighted, right? So they want to see return on investment I mean, they'd love to see it in weeks, or, the most 1 quarter. I think the AI, the benefits we're going to get from it, and also the benefits from the infrastructure build out, um, are, they span across. Like, for instance, I've been mentioning this county over here, Loudoun. It's gotten to a point that there's so many. I mean, wife and I drove through Data Center Alley. I mean, these buildings are immense, and they are loud, and like, you're in a closed car with all the windows closed and the radio on, and you can hear the humming. It's really awesome. But, the Loudon is finally getting to a point, again, local politics, but it's a cool data point where they're saying, hey, if you want to build data centers, you've also got to help power these things, because the energy bill for all of our residents is going up, because you guys are using a ton of energy and a ton of resources like water for cooling out of the river. So these data centers are now being asked, if they're going to build one, that they have to have a certain amount of battery backup so that they can help the grid, a certain amount of renewables. Some of these data centers are, recommissioning. The companies are buying nuclear power plants that have been shut down and rebuilding them, where the government couldn't, or the utilities couldn't pay for getting these things up to par. There's a ton of money right now in AI. So, the benefits are not just in the immediate. And I think that's a problem of the investor, especially here in the States. We want an immediate ROI. And same with I mean, I'm seeing new AI tools on a weekly basis. I mean, I'm trying to use some of these. I'm bouncing between one and the other, because the other one will improve to the point that the other one was, in a week's time, left not no longer current, and you're like bouncing between trying. These things are amazing at what they're able to do. I mean, we're looking at just our options data and seeing patterns, thanks to these language models and thanks to these AIs, that we could never see before, that can turn into profits for us and our users. I mean, it's amazing, but the results are not going to be tomorrow. So this amount of investment, just like in the dot com, it took like 10 or 15 years to finally see all the benefits of the stuff that was done in just those 1 or 2 years. And because people couldn't see the immediate, ROI, they started to pull their money out and they caused the bust. But that also isn't a bad thing. I mean, in the I want to make sure I'm quoted correctly on this, but when all of a sudden these companies are forced to tighten their belt and do things efficiently, it's almost like you get things done in a better way than if you're just throwing money at it and doing it, all balls to the wall. So I don't see a bust as that bad, except for unless you're smart with your investment dollars. I mean, people who are investing in these companies could wind up being the losers. But you get some guidance from somebody like me, and you could turn those losers. We can follow the trends faster than the trends are created, and apply the correct strategies and benefit our personal selves. So that's my answer: is don't just be one of those people who are jumping on the AI bandwagon, especially now. You should be, selling premium, looking at different companies, all that good stuff.
Yeah, it's like, hey, we're company A and we're going to be doing AI investment.
Yeah.
Yay!
Oh,
But
nobody wants
when,
FOMO.
but when is it going to actually, impact the company? And Oracle just said, oh, hey, we're off by a year on our data center estimates, right? Um, the thing that I take away from it as well, AJ, is I can barely keep up with the enhancements on these AI tools. I mean, it's just every day, like you said, it's something new. And then I've become a big Sora fan with
I
creating
I, I
my
watch
AI person.
I watch your commercials. I love them.
And I every time I put the video into render, I see it thinking, and in my mind, I'm like, these are what these data centers are humming
Yeah.
along. It's just like millions of me's making videos and
Yeah.
images and PDFs and PowerPoints
Yeah.
and all this and that. So we'll definitely keep an eye on it, and it's good to hear. And you were just showing me before the show, and we'll probably go through some of the advancements in the options lookup tool, and just the trading trainer dev team has really been making product and services better through the use of AI. So I think from our storyline, we are benefiting. Our business, this business is benefiting and using AI. Quicker than some of these other storylines that are coming out. So that's our morning sip. Although I do have a second one that I'd love your opinion on. I don't know if I could play the video, but maybe I'll just quote it. So, big news out of Australia is that they've
Mm.
banned social media for teenagers 16 and under, which
Mhm.
personally I think is great. I never had social media at
Mhm.
16 or under. Social media came out when I was like 20 years old, right?
Mhm.
So I was kind of at the age where it was very impactful. This is a clip from the Australian teen meeting with the prime minister explaining this, and the teen is like, yeah, I don't think it's a good idea. We're just gonna find another way to do it. Which I thought was funny. But AJ, your take on a social media ban for kids under the age of 16. Now, this is Australia, which I think is a sophisticated economy to kind of lay the foundation of whether this is good or bad. But could you see something like this in America being good or bad?
Well, first of all, I can't see it happening in America at all, in the United States specifically. When I used to live in Canada, the Canadians used to make fun of me. They're like, "Why do you guys call yourself Americans? We're all Americans. You guys are just the United States, and we're Canada, but we both live in North America." Uh, so
Good point.
yeah, they always used to say that to me. So I was like, yeah, okay, whatever. Um, I don't see that happening in the United States. However, I do think that it's a great idea. But I got to tell you, I've got a lot of friends who have been teaching their kids how to do like ads and how to sell their, hobbies, whatever they be. One of my friends, is their little kid is like selling baseball memorabilia. on so when it comes to like teaching business and how to run ads on a social media platform, I think get the kids started as soon as they can comprehend that stuff. But I understand what's really also happening is kids are becoming the consumers and not becoming using it as a tool. So I'm all for that. I'm not sure because I've got a 4-year old and my 4-year old loves YouTube Kids, but we try everything we can to get her using like more of the apps where you're learning your ABCs and 1 2 3s and things like that. And I'm not sure she needs to have it. She doesn't need to be comparing herself, especially to friends across the world. I think instead she could just compare myself to my friends right there in my classroom. So I'm a fan of it.
Yeah, even as like an adult, when I hear a comment or I get a comment or someone replies to a tweet, I'm emotionally affected. I'm either happy, or I'm upset, I'm angry, and I can only imagine the mindset of somebody 14, 15, 16 who doesn't really know how to deal with what a troll, right? Somebody took a video of them and it's going viral and everybody's seeing it and it's being shared,
As
right?
a parent, since that I never lived through that, I don't know how to give any guidance, right? Yeah. It's
like,
kind of sketchy, man.
So we'll see what happens, but it was interesting. The teen was like, "We'll find another way." And
I mean,
the project
VPNs,
didn't
right?
have a response.
That's what's happening. That's what I understand is happening. One of the biggest industries, and I keep track of a lot of the big industries, of course, is porn, right? And all these states here in the United States have banned porn for people under 18 or anything like that. You get like a $15 a year subscription to a VPN, and you've already figured that one out, right? So it's not going to be hard to get around these bans. I think that there's a whole bunch of folks in China. China puts a lot of these bans. People just buy VPNs. I mean, the internet by design was not to allow anybody to have any sort of censorship. So there's always going to be a way in the internet if you're smart enough and can share the idea to get around it. The question is should you and can you, have a different distraction than, comparing yourself to your peers or talking to people on chat. You'd rather just talk to people on your school bus.
Yeah, and it kind of also brings the question of free speech versus not free speech, seeing that Europe really has clamped down on what you can say about somebody on social media and this and that, and even locking people up, versus in the United States you pretty much say whatever you want to whatever and there's not really too many repercussions. But it seems as if Australia is kind of leading the charge here of maybe testing the theory. So we'll keep an eye. I'll keep an eye on it. That's for sure. But I wouldn't be surprised if some like genius 15-year-old is like, I created a way around this, and you could go download my app and this and that, because it's that's the world we live in now. So there you go, folks. That's our morning tea, our morning sip. Just some topics from around the world. We're halfway through the show. Let's go ahead and pull up AJ's quick links real quick. We've got this wonderful view here. Let's get the quick links up. Let's do this bad boy. All right. So we're going to throw AJ's quick links into the chat. This is going to have a lot of the goodies that we're going to be reviewing and going over on the show. Got access to all the social links. You'll be seeing that free indicator suite, magenta, blue arrows to help you set up your entry signals. We've got AJ's free workshop. So if premium selling is a new concept for you, this is a great way to get you started. We've got some custom coaching for those people that need a little bit more hands-on training. And we've just got the trading trainer program in general. AJ's had a busy week giving presentations all around.
I need to get one of the
world.
I need to get one of the replays of the VIX hedging presentation that I've been giving. In the last couple of months, I've been giving a lot of presentations on how to do the VIX hedging trade. So I should get one of those up there.
Yeah, for sure. And if you want to go to the YouTube channel and type in VIX, we should definitely have, you know,
We got
10
clips.
plus of you kind of describing that over the past couple of years. So it's really been getting juicy lately, though, for that VIX trade.
Oh
So
yeah.
if that's something that the lovely viewers out there haven't checked out, head on over there. We are broadcasting live, so if you guys have any questions, feel free to throw it into the chat. Otherwise, we're going to take a short break here. We'll be back for AJ's pick of the week, our speed round, and any other things to get you set up for success to close the week out. So sit tight, folks, and we'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So we're through the week recap. Now let's dig into some specifics. Let's take some of these logics and principles and apply it to a name that, you know, our lovely viewers can go home and paper trade, or, you know, set themselves up to get a confirmation of some sort. So your pick of the week this week is a company called AST Space Mobile. Ticker symbol.
I think it's actually mobile. I probably put a I put a typo in there.
Ticker symbol ASTS. Yep, mobile.
Yep.
Space Mobile.
Yeah, this is a cool company. They are attempting to make it so that on our cell phones we can use satellite cell phone connections and not have to do anything, not have a special cell phone or anything like that. I also think that they're over budget. I think that they're having a hard time meeting their deadlines, and you can see it in their stock chart. So I've got their stock chart up. So technically, I mean, they've been producing profits. Have they, or is that a negative? That's a negative. They've actually not been producing profits, but they have been capitalized to a certain amount. And I think that there's this level of resistance at about $85. And I'm not sure where support will fall. If I go back, I'm going to go back 2 years on this company. You can see that they kind of had a level down at $20. They're at 4 times that amount now. Okay, you can guess what I'm getting towards here. I think that it's time that we, especially once we get our top signal, once we get our magenta arrow, I think it's time that we short this company. In fact, I'm not the only one who thinks that. If you take a look, I'm going to bring up our options lookup tool. I've got ASTS. One of the cool things about our options lookup tool is that you can click here and get a good idea about what this company does. Excuse me. I've got some quick views on my chart, and one of the quick views is to look for a viable equity substitute. This would be a option that you can buy instead of the stock that would act exactly like the stock. And so usually when you do these, you buy them about 8 or more months out so that, you know, you get the leverage, but you don't have to worry about expiration. So let's look at, for instance, a June. And I'm looking at the put side because if I want to short the stock, I would go for a put. And you'll notice that none of these are coming up green. And I'll even go out maybe to the January leap. You can see the calls got some substitutes. My AI tool here is identifying which ones would be good equity substitutes. But over here, nothing on the puts. So I started to look at them and to try to figure out why. And I realized, and this is the aha, people are buying these puts so fast that it's driven the price up. These things are overpriced. We could actually look at the theoretical price, which is this price to the right. And so the theoretical price, and so there's a lot of volatility going on, but it seems as though these particular options have been pushed up in price because there's a demand for them. That means that, you know, they're overpriced for what is happening. In other words, there's no option substitutes. So you're going to have to, if you're going to take advantage of this downturn, people are already predicting that it's happening. They're betting against this stock. You'll want to jump on by shorting the stock. The other alternative, once we get the signal, again, I don't want you to do anything until you get the signal. But if you're not able to do shorting of stock, you don't have a margin account, you don't have an agreement with your broker to be able to short stocks, the other alternative is to do a bear vertical spread. Probably pick some strike prices in the 85 to 90 range, something like that. Maybe have a expiration date. The third Friday of January would be a good idea there. But remember, with vertical spreads, there's a very quick cliff from being profitable to losing the whole initial investment. So you only want to buy as many vertical spreads as you're willing to lose. So whatever your portfolio max portfolio risk is, that should be the only amount that you buy. It's easy with vertical spreads because they're so inexpensive to go overboard, but then your risk profile is through the roof. So you want to be very careful with vertical spreads. But that's where I'm going with this SIP is I think it's time that we bet against AST SpaceMobile, at least in the short term. And if you bottom out here at 50, or you might bottom out even at 40, I'm expecting it to go to about 2/3 to half its value. If you bottom out, you could always sell premium, or you could just take that and trade it as a quick term directional trade.
Yeah, a little bit of a more pricey stock than we've had the last couple of episodes, and it's interesting how you laid that out with the availability. Very rarely do we not see options available as a substitute that makes sense. So I think that's kind of a unique instance here as well.
Price is being driven up. People are already betting against AST SpaceMobile.
So that's AJ's pick of the week, AST SpaceMobile, ticker symbol ASTS. Go ahead and add that to your watch list and see if we get that follow through. All right, we've got a speed round here. We've got some lovely folks from all around the world that want AJ's take on some popular and not so popular names. We'll go ahead and start with Tom out in my neck of the woods, Oceanside, from Oceanside, California. Wants to know what's going on with Nike, ticker symbol NKE, the famed shoe manufacturer.
They've got a earnings announcement coming up. So we may want to, hold off until next week after market close. So after market close, they'll be making an earnings announcement on 12/18. So we may want to let that pass. But the question is Nike going to get to some new, highs up here at $80, or are we going to stop at 70? I think, Tom, you got to wait for that earnings announcement to come and go. And Nike has a tendency during earnings announcements to spike. So I don't want you to try to do the earnings announcement with our calendar spread. I don't think that's a smart move. What I think you need to do is, unless you have some bias as to how the earnings are going to go, I think you let earnings pass and then you reassess. But if we get a top signal, and I think it's something that we should look at after earnings. Again, after earnings, reevaluate all this. But if we get a top signal, I wouldn't mind going against Nike for just the short duration. In other words, shorting the stock or looking for a substitute option. Again, let's use the same technology that we were just using. Let's type in Nike, NKE, and see what they say about put option substitutes. We're letting it load here. It takes a second because this AI basically runs through the whole option chain. And if you've got a big option chain like Nike, in fact, I'm going to focus everything on just the monthly options instead of all of the different expiration dates. You got the number of days to expiration over here. And we've got a heck ton of cool tool tips that, just in case you don't understand what's going on. But let's take a look at, say, for instance, let's look at the September expiration. Again, we want to look at the put side. Oh, yeah. There's plenty of substitutes. You could use this $90 put. It's going for $23.55 right now. A little bit underpriced according to the theoretical value. The actual price of Nike right now is 67. So you're paying 1/3 of the price. You're not having to have a margin account or any of that goes with it, and you can bet against Nike. So that's probably what I would have on my radar, Tom from Oceanside. But again, do anything until earnings is announced, and the hype or the excitement around earnings, whether it's positive or negative, is in my rearview mirror, and I reassess.
Be curious if Nike says AI on that earnings call.
I mean, that's the buzzword, isn't it?
These new Nike Air Maxes come with AI. You're like, oh, I can talk to my shoes now.
Yeah,
they have a personality.
Or maybe they like adjust as you're running.
Ooh, there we go. We'll keep an eye on that. Thank you for that, Tom. Nike, ticker symbol NKE. Our second name, I think this one might be new to the show. I don't know, AJ. You tell me. Wayne out of Richmond, Virginia wants to know what's going on with Fidelity National Information Services, ticker symbol FIS. What's the blurb say that this company does?
I'm pulling it up. Let's hit it. Engages in the provision of financial services technology solutions. It operates through banking solutions. The company provides core processing and ancillary applications, mobile and online banking, fraud, risk management, and compliance, card. In other words, they're probably the ones behind all of your apps. You know, the banks don't create apps; they outsource that. So maybe we've got this Fidelity National Information Services who does both the back end, front end for a lot of those companies. So they're in the tech world, basically. Let's take a look. This is Wayne. Oh, Richmond. Richmond is not down. Richmond is about 2 to 3 hour drive, depending on traffic from me. Big banking. They used to be a big tobacco city, but now they're a big banking. Capital One is down there. Okay. Anyway, earnings is in our rear view mirror. This company makes money. $1.51 per share of earnings, last earnings announcement. Looks like they hit a bottom. I don't know, Wayne, are you thinking of going long, or are you thinking of going short? I could see arguments for both. I see that we have near-term resistance. We're not far from it. In fact, it looks like we've got a key reversal down bar pattern that's forming today, meaning, that's a hint at a top. I don't have my magenta arrow yet, but if you're thinking that $68 is our resistance and we find a reversal, I could see using my fast MACD as an end of day signal, and then looking for subsequent day follow through just to make sure, because if it winds up blowing through 68, I mean, resistance won't even be until 82. So I'm curious about what's going on here. I don't know the backstory of this company, but I could see what you're thinking here. So be prepared to short this. In fact, not only should we be prepared to short it, if you don't want to short it, I've got a 92.50 put that I've got, and a 105 put, whichever one you feel like this might be an apparition because it's out here by its own. This is $38. How much is the stock? $67. So about not just a little bit over half the price, and you'll get all the benefits of shorting the stock and about twice, a 2x leverage. I could see you being prepared. Again, I'd wait for the signals. That's what a disciplined trader does, right? They come up with a trade plan, and then they trade their plan, right? They plan their trade and then trade their plan. So come up with a trade plan, probably use that half the price put option as your investment. When you get the top signal that is in your plan, then you short it, and then you be prepared. I could see this becoming a great income. When this comes back down to the $62 range, sell a put, buy yourself a protective call, create that collar, and that's an income. The collars are income producing, right? As long as you stay in that collar, you get another income for that cycle. So I could see you totally doing this. But then also, I would prepare for if we go above $68. Prepare with maybe a substitute call option. Again, I would stick with my January expiration, January 2027, we're going all the way out to. And look, our AI tool is telling us to use the $40 call. That thing's going for about 28 bucks. Again, quite a discount on what the stock itself is going for. So have two plans for what happens as we approach this level. This level of resistance could easily become a level of support.
All right. That makes a lot of sense, AJ. And we love those premium selling setups, especially ones that can recycle themselves every couple of weeks. So that's Fidelity National Information Services, ticker symbol FIS. All right, moving on to our third and final name. This is actually a company that one of my college roommates now works at. But
Cool.
Curtis out of Louisville, Kentucky is interested in Devon Energy, ticker symbol DVN. Energy seems to be starting to pop up as a name, as an industry. I'm seeing in some of the headlines. Maybe because of all this data center usage. What are you seeing with Devon Energy here?
I'm making sure I understand exactly. An independent energy company engages in the exploration, development, and production of oil, natural gas, and that's going to be interesting. By the way, I don't know if you're following what's happening in Venezuela, but Venezuela, there's definitely the whole thing about regime change, the opposition to the current person in charge just won the Nobel Peace Prize. So there's from a moral or a upstanding world citizen. They kind of want the girl who won the Nobel Peace Prize to be in charge over there. But also, behind the scenes, Venezuela is an oil producer, and so the U.S. usually only does things that's going to benefit them, in some sort of capacity. I mean, people still look back at Iraq from 20 plus years ago, and that turned out to be kind of a big oil play, right? So maybe there's some oil things going on in Venezuela. Wonder how this is going to work with this company, who's more of a American. They're in the different places. America. The United States, sorry, my Canadian friends, the United States is one of the biggest oil producers out there, thanks to the fracking technology. So it looks like that's what this company is all about. So let's go ahead and take a look. I'm going to have to look back more than the last 6 months. Let's look at, I'm going to go back 2 years. Okay, this is sometimes you have to take a step back to get an idea of what's going on. So we're approaching a level of resistance that we were at in the beginning of 2025, the beginning of this year. So maybe let's see. This is Curtis from Louisville, Kentucky. Curtis, I see what you're seeing. There's definitely some overhead resistance. These people who bought at these highs back in the beginning of this year have probably been white knuckling it till now, and they've been like, oh my gosh, I bought into this and then it went down, and they're finally getting a chance to sell at break even. So that's going to be, selling is what causes a level of resistance, right? And so these people who have been waiting all year for an opportunity to get out of this thing so that they can like go back to their significant other and say, hey, I didn't wind up losing the ranch. They're going to probably do that, and so I see what you're seeing. And we've got. I'm going to bring us back to the present here now that I've got a bigger idea of what what's been happening. I'm going to bring us back here. We got a signal, and this is called a Lincoln's hat. It's a doji bar, and it looks like Lincoln's stovepipe hat, and that usually is some sort of top signal. Now, I don't personally trust in bar patterns alone, but I use them as kind of confidence building, confirming, validating signals. So you've got this Lincoln's hat along with our indication, end of day indication that a top is being found. But then you have all these bars that follow that were, uh, not follow through. And I'm a big guy who says on the trading day, you need to have follow through to your confirming signal. So I haven't gotten follow through to date. However, I also haven't gotten a signal that says stop looking for follow through. If I got one of these light blue arrows, I would say, okay, maybe it's time to stop looking for follow through. Keep looking for follow through. Follow through, unless you get, people are like, well, how long do you keep looking for follow through? How many days after the signal? You keep looking for follow through until either you get your trade filled or you get a reversing signal. No reversing signal means keep looking for follow through. So I would keep looking for that follow through. And the idea here is we're going to short Devon Energy. We're going to go against Devon Energy either by buying, um, shorting stock in lots of 100, or I know it's not easy to short stock. You've got to have a margin account. There's fees often, depending on how your standing is with your broker. So let's look for a substitute. Here's Devon Energy. We like our January 2027. We can go with December or September as well. And we're looking on the put side of it, see if our AI finds anything. Okay. In January. So I think that this is not an issue of, the fact that people are driving the price up. I think it's more of a liquidity issue. The January. So our AI not only looks for um, the options that are going to mimic the stock the best by looking at ones that have the most intrinsic value. It's also looking for ones that are traded, where you could go in there and there's a market, meaning if you want to buy something, somebody will be willing to sell it to you. Or if you're wanting to sell something, somebody will be willing to buy it. Sometimes these options don't have enough players, and you go in there and you're like, hey, I need to sell this really quick. It's losing. And people will be like, I don't care, and you won't get anybody to buy it from you. So you want to make sure there's a market. And that's what I think why we're not seeing anything. I could look closer. And yes, that's exactly why we're not seeing anything in the December or September options, but are seeing stuff in the January 2027. And that's just a matter of the January 2027 option has been around longer, and there's been more people. It takes a moment for options to be created and then traded from when it's first open, when the doors are first opened to allow trading. Then people have to say, well, I'll write some of those put options, I'll write some of those call options, then the trading starts. So it takes some time for momentum, and that's why the January has that. So I would go with this January 50 put. That's a cash trade, and you could be ready to go. That would be part of my trade plan. So I see what you're seeing, and I see that level of resistance at about $38, $39. I would wait for the signal. You already got the signal. I would wait for follow through, and then when you get that, trade against Devon Energy in the short term. Turn this into an income trade. I can see you doing that. Collar it when it hits a bottom every time. Undo the collar at expiration. Undo the collar at tops. Turn this into a money maker. I bet you can make double-digit returns every time this cycles. Devon Energy's nice symbol. Thanks for bringing that to our attention.
Yeah, we're the correlation with the Venezuela geopolitics and geopolitics in general is going to be interesting to watch over the coming months, if not the rest of
I think the
2026.
U.S. just got one of those shadow fleet oil tankers leaving Venezuela, heading for Iran or something like that. That's what I read in the news last night.
Yeah, the other big tidbit out of Venezuela is how they shoot down these narco boats and then post the video on Twitter.
Yeah, it's quite brazen. It's quite brazen. And you look at the numbers and you realize that there have been past administrations that actually did more stuff, but it just wasn't brazen. It wasn't on TV. It wasn't on the socials. It was just done behind the scenes. Nobody was the wiser. So, the fact that this has to become kind of a big, giant, like, uh, media campaign, sometimes you don't want to know what governments do behind the scenes.
Yeah, well, these days, we don't have that luxury. We're basically going to get everything in real time, through one social media platform or another.
Everybody has a camera and the ability to publish something global immediately, right?
And go live, literally go live in the flesh. So that's the world we live in. All right, folks, that pretty much does it for us here today. So as always, AJ's quick links is in the chat. So if you're interested in joining the community, getting access to those free indicators, showing us some love on your favorite social media platform by hitting that like, hitting that follow, and hitting that subscribe button, we truly do appreciate it. Like AJ said, he's had a busy week this week. We're going to get some of those clips from those presentations into the mix. Also, some tidbits from today's episode. As always, if you guys have any questions, feel free to leave a comment. Head on over to the website, hit that support button, send us a DM, and somebody will get back to you as soon as possible. Otherwise, AJ, heading into next week, what are you really looking at, at the start of Monday? Obviously, today we'll see how the sell-off pans off, but next week, what do you have your eyes on?
Well, next week is the week before options expiration for the monthly December contracts. So I'll be looking at how to close out my positions next week. And then finally, I'll be thinking about my January options already, and realize that, between the weeks of Christmas and New Year's, right, the winter holidays, weird stuff happens. When volume goes down, the people who are left over trading are usually those extremes people, right? Because most people who, act with control are off with their families. And so it's only those extreme people who feel like they still have to be connected to the markets when everybody else is off having family holiday time are the ones who are going to be moving the markets, right? And so just be careful. And we're going to be talking about that next week, but we're going to be careful and not, we're going to pay attention to volume when we see price action over this period of time, so that we don't get caught up in stuff that actually gets reversed as soon as like more level-headed investors come back in the new year.
Yeah, and looking at the calendar, we've got like midweek holidays. We've got a Thursday Christmas. We've got a Thursday New Year's, which is always going to kind of put a wrench into those, the midweek days off of the market, right? So we'll be tuning in on our Friday show to kind of give you our feedback.
Won't miss a show.
But AJ's right. The volume will go down, and, we'll still be looking at individual names. But until then, that's all we got for you folks. So we truly do appreciate you guys sticking around and showing us some love. We'll be back next week, and that's all we got for you. So thank you, AJ, for providing us with some lovely insight. Thank you to the lovely folks for joining us. That's all I got from my end. I'll catch you guys next week.
Take care, everybody. Thank you.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe